Welcome back to Investing Talk Podcast.
Today we're looking at United States antimony.
As usual, before we start, subscribe, like, and comment to this video to support the show.
Yeah.
And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis of United States antimony. The conversation here, well, it really has to start with the strategic thesis.
Right, the big picture first.
Yeah, because this isn't just, mining, it's geopolitics, it's national security.
Okay.
This company, they're actively trying to become the first fully integrated antimony company outside of China.
Fully integrated, so mine to metal, basically, controlling the whole chain.
That's it. From the mine right through to the purified material, gives them a massive advantage.
But why antimony? What's so special about this metal? Why the intense focus?
Well, it's officially designated a critical mineral.
By the U.S. government, right, for national security.
Exactly. Essential for defense things, specialized ammo, alloys, but also it's becoming really key in next-gen batteries.
Sodium-ion batteries, those are getting some buzz.
They are. And don't forget fire safety. It's a core component in flame retardants, really essential stuff.
And here's the kicker, right? China controls most of it currently.
Something like 80% of the world's supply and, crucially, the refining capacity.
So having a non-Chinese source, that's not just good business, it's strategically vital.
It's a political and economic necessity. That alone creates this strategic moat that's pretty rare for a mineral company.
Makes sense. And that's probably why they're getting so much attention lately.
Precisely. You're seeing this high-profile media exposure. CEO has been on Fox Business, Bloomberg TV.
Highlighting the defense angle, I bet.
Absolutely. Talking up those contracts. And that kind of visibility, it signals that the big money, the institutions, maybe even the government, they're watching this whole supply chain shift very closely.
Okay, that's the strategy, the why. Let's ground this in the numbers now, because a good story needs good financials to back it up.
And the recent reports, wow, the revenue growth is exceptional, hard to ignore.
Lay it on us. What are we talking about?
Okay, so for 2024, they reported $14.94 million in revenue.
Which is up.
A massive 71.84% year over year from 2023.
71%.
And even more recently, if you look quarter over quarter, the revenue growth was, get this, 187.3%.
Oh, okay. That's hitting an inflection point.
Definitely looks like it. They're scaling up production fast.
But scaling fast often means burning cash, right? How's the profitability looking?
Well, that's the interesting part. They are showing operational leverage pretty quickly. They still had a net loss, yes, but that loss narrowed significantly by 72.66% in 2024.
That's a big improvement.
And even better, the operating margin actually edged into positive territory. Just barely, plus 0.2% for the trailing 12 months, but still.
The positive is positive. Suggests the costs aren't running away from them as they grow.
Exactly. They seem to be managing the increased output efficiently.
And do they have the balance sheet for this kind of aggressive move? Debt?
That's another strength. Debt to equity is incredibly low, just 0.03.
Practically no debt.
Pretty much. Which, when you're talking mining, processing, big capital projects, having that financial flexibility is huge for management.
And they certainly used that flexibility recently, didn't they? The capital raise in October.
Oh, yeah. That was significant. 2 big registered direct offerings.
What do you think about $51 million? Right?
Approximately, yeah. Which, direct offerings go straight to institutions, often at a discount.
So potentially dilutive for existing shareholders.
It absolutely can be. But the markets seem to swallow it okay.
Why? Because they know where the money's going.
I think so. It boosted their cash reserves to around $64 million total, and it's explicitly earmarked.
For what specifically?
Inventory expansion, improving leaseholds, boosting smelter capacity, and importantly, funding potential acquisitions.
So growth capital. Not just keeping the lights on.
Exactly. Cash aimed squarely at expansion.
Okay, with that much cash and that kind of growth, management must be feeling pretty confident.
Seems like it. They substantially raised their 2026 revenue guidance.
To what?
$125 million.
Wow. From roughly $15 million now? That's a massive jump.
It's huge. Shows incredible belief in their ability to scale up based on this strategy.
And are analysts buying this story?
The consensus rating is actually strong buy. Coverage seems positive, really focusing on that non-Chinese supply chain narrative. And, well, the recent cash injection helps.
Right. So let's tie that financial firepower back to the mission, the government work.
Yeah.
That seems critical.
Oh, absolutely. You have to talk about the contract with the U.S. Defense Logistics Agency, the DLA.
A $245 million one.
That's the one. It's foundational. It's not just a one-off large order.
It's consistent revenue.
Exactly. Provides underwriting revenue for several years. For a company dealing with commodity prices, having that predictable defense demand, it stabilizes everything. Planning, output, it de-risks a big chunk of their future.
But getting that contract executed, I heard there were some operational shifts.
Permitting issues? Yeah, that's right. There were some anticipated permitting delays up in Alaska, which honestly is pretty common for big resource projects.
So what did they do?
Showed some real agility, actually. They pivoted their operational focus pretty quickly to make sure they could meet the 2025 requirements for that DLA contract.
Yeah, where did they pivot to?
Montana. They shifted the core focus there, specifically bulk sampling at their Stibnite Hill site
Okay.
and processing that ore at the Thompson Falls smelter nearby. That quick change kept things moving, minimized downtime, shows they can adapt.
So domestic production is ramping up, but they're thinking bigger than just the U.S., right? That acquisition talk.
Yes, the M&A play. That's one of the biggest near-term things to watch.
The Larvado Resources deal.
Exactly. They put in a confidential, non-binding proposal back in October to acquire 100% of Larvado.
And why Larvado? What's the goal there?
Resource security. Simple as that. It's about expanding their known antimony resources way beyond North America.
And is it likely to happen?
Well, United States Antimony already claims to be Larvado's biggest shareholder. So the market chatter. Yeah, speculation is high that this takeover probably closes.
Okay, so picture this. They get Montana running smoothly. They successfully acquire Larvado's global resources. They've got $64 million in the bank and a guaranteed government contract.
It completely changes their profile. It makes that whole fully integrated, non-Chinese idea very, very real, tangible.
Huge potential. Okay, so for investors, especially maybe shorter-term traders, the next few months seem packed.
Absolutely. If you're watching this stock, there are key dates coming up fast. Real inflection points.
Let's run through them. What's first?
Q3 2025 earnings release. Expected around November 14th.
And what's the market looking for there?
Pretty simple, really. An update on that $51 million cash. How's it being spent? And crucially, what are the initial numbers from that ramped up Montana production? Revenue, margins. Does the pivot work financially?
Confirmation needed. Okay, what's next?
Then you've got index stuff in December, specifically December 6th, the Russell Microcap ETF rebalancing.
Explain why that matters for people who don't track index mechanics.
Sure. So when an index like the Russell Microcap rebalances or adds a stock, all the big index funds that track it have to buy or sell the stock to match the index.
Forced buying or selling.
Exactly. It's not based on fundamentals, it's driven by the index rules. That forced activity can cause big spikes in trading volume and short-term price swings. Volatility.
Which traders might like. Okay, third date, January 15th, 2026. That's the institutional holdings disclosure deadline.
So we see who bought into that $51 million raise.
Precisely. If you see well-respected, big institutional names showing up with large positions, that's a major vote of confidence, third-party validation of the whole story.
Got it. Any other maybe less concrete catalysts bubbling under the surface?
Yeah, there are always speculative things floating around, rumors about potential new supply deals.
With who?
North American battery manufacturers, specifically related to sodium-ion. If they land something like that, it opens up a whole new market beyond just defense and flame retardants. Diversification. And anything else.
Well, there's chatter about the ore itself in Montana. From Stibnite Hill.
What about it?
Rumors that the preliminary sampling results show much higher ore grades than initially expected.
Which would mean?
Higher processing margins. Potentially much higher. If that turns out to be true, management might even have to boost their 2025 guidance again.
Okay, it's easy to get swept up in all this positive momentum. But we need balance. Risks, valuation.
Absolutely critical to talk about that, because the growth story is exciting, but it comes with significant risk, and right now, a very, very high valuation.
Let's hit that valuation first. It looks steep.
It is. The price-to-sales ratio, the PS, is around 31x.
31 times sales. Just for context, what's typical for, say, a mining or industrial company?
Mature ones. Usually somewhere between 1x and maybe 5x sales.
So 31x, what does that tell you?
It tells you the market is pricing in perfection. Years of flawless execution, exponential growth. Basically, a huge expectation premium.
Meaning no room for error. Any slip-up could hit the stock hard.
Immediately, and probably severely. Which brings us to execution risk.
Right. They're juggling a lot.
A ton.
Yeah.
Scaling up Montana, keeping Mexico running, trying to integrate Larvado globally if that happens, spending $51 million effectively.
All at the same time?
Yeah, amid volatile commodity prices. It demands truly world-class management and coordination. Huge operational challenge.
Okay, what else? Concentration risk.
Definitely a factor. That DLA contract is fantastic, but it also means a huge chunk of revenue depends on that one government deal, maybe a few key customers.
So change in government policy, a delay in renewal, that could hurt.
Severely.
Yeah.
They need to diversify. Those battery rumors help, but they need more solid commercial industrial contracts outside of defense.
And all this uncertainty and high expectation that fuels the volatility we've seen.
Absolutely. Look at the chart. The stock price surged from under $1 to what, near $8.68 recently?
Big swings.
Huge swings. It reflects the binary nature. If they nail the execution, maybe keeps running. If they stumble, the downside is just as dramatic.
What about the technical picture right now? Still bullish despite the volatility.
From a technical standpoint, yes, still strongly bullish overall. The price is holding well above key long-term moving averages. Confirms the uptrend that really kicked off with that DLA news.
Any key support levels traders are watching?
The immediate support zone seems pretty solid, down near $6.50 to $7.
And on the upside, if these catalysts hit, where might it head?
Near-term resistance targets seem to be clustering around the $10 to $12 area. That's likely fueled by hopes for the acquisition closing and positive news in the next earnings report.
Okay, so let's pull it all together. The final investment thesis.
Well, the analyst consensus is still strong buy, which is telling. It feels like the company's unique position.
The critical mineral angle, the government backing.
Exactly. That seems to be outweighing the usual concerns about such a high valuation, at least for now.
So it appeals to different kinds of investors.
I think so. It looks attractive for shorter-term trading, definitely, given that packed calendar over the next 3 months, earnings, M&A news, index changes. Lots of potential triggers.
And also for the long term?
Potentially, yes. If you really believe in the long-term strategic importance of antimony, the defense demand, and their ability to execute this scale up into industrial markets too, it could be a long-term hold. Big if on execution, though. The key takeaway for United States Antimony is whether management can successfully turn strategic defense contracts and ambitious acquisitions into consistent, scalable profitability and a critical global supply chain, or if the extreme PS ratio signals a market expectation they simply cannot meet.